right, how are y'all doing? I'm excited to chat with you guys. I'm back. So definitely looking forward to diving into some really good information with everyone. A quick introduction. My name is Cody with Prime Corporate Services. We are a legal, financial, and tax firm. We specialize in a few different areas, right? From entity creation, um, business and personal taxes, estate planning, and I love this type of a conversation, really to educate and share best practices when it comes to entrepreneurship. So I want this to be as interactive as possible. I highly encourage everyone to use the chat function if you have questions. If something I go over just simply does not make sense, don't hesitate to dive in here and let me know. We will dive right into it. So our consultation obviously may be recorded, and then a quick disclaimer. The slides we've put together, we have built these over the last, probably 4 or 5 years. There's a lot of examples in here that are just that. It's examples to give you context. Just know that, none of the specific numbers we go over are based on anyone's certain income levels. Again, this is to really show you how all the components will work together. The purpose of this today is very simple. I want to educate and share best practices when it comes to entrepreneurship. We're going to touch on our most recent tax reform and explain how it has a direct impact on you. We'll talk about the correct foundation from entrepreneurship, looking at it from both a legal and financial perspective. And then my favorite part is getting everyone on the path of, asset protection and tax savings. So first things first. The Prime ecosystem really explains kind of who we are and what we specialize in. So starting at the top left, entity formation, meaning we set up LLCs and corporations across all 50 states. We, of course, help with obtaining your EIN number, the articles, operating agreements, and bank accounts, really making sure you have the correct foundation laid. Second would be our business credit. We do have an in-house credit program. We walk our clients through, securing corporate funding, building a business credit profile, and really getting you away from being the personal bank to your business. We then have estate planning, so we can set up, trusts, wills, living wills, power of attorneys, and then, as I mentioned, we also have our in-house tax division. And a saying that we've really hung our hats on here is it's not about what you make, now it's all about what you keep. And we want to see you keep as much of your money in your pocket as we possibly can. Plan, profit, and protect, right? Get the business set up, right? Have a good plan. As you're making money, let's do everything we can to protect that and keep it in your own pocket rather than it going to the IRS. Well, so we'll start with our tax reform. In 2018, the federal government introduced the Tax Cuts and Jobs Act, which this is our newest tax reform. It'll be in place. And as you see, these were the biggest change we've had since the 1930s. What it really boils down to is in order for somebody like any of us to go and operate in self-employment, we now have to first legally do so. Before 2018, that did not mean you could illegally do it, right? Before 2018, you could really get the business kind of operational and then worry about your structure much later on down the road. Where now all they're saying is, look, everyone has the same rights and the same abilities to be self-employed. We just have to show a legal start to our business in the beginning. So very, very straightforward. So the way that we accomplish the legal start would be with entity creation. And the recommendation we make would be to first start with setting up a holding company. So a holding company is an LLC, but it is set up in one of these 4 corporate haven states. So either in Alaska, Nevada, Delaware, or Wyoming. Out of all 4, I strongly recommend Wyoming for the simple fact that it is the quickest one to get done. It only takes a matter of a few days. It is also the cheapest overall to operate with. But what the holding company will do for you are 3 things. First, this gives you the maximum asset protection, meaning it is significantly more difficult to pierce the corporate veil in Wyoming than anywhere else. So you give yourself the best protection. Second would be the tax advantages. We're going to go into a lot more detail during this conversation, but this type of a structure really simplifies your accounting. It keeps your taxes very easy. And then third is privacy. Right? In Wyoming, they are referred to as a non-disclosure state, which means they do not list your name on public record as being an owner or a member of the holding company. So nobody can, go and look up your business and see that you own it, or then try to cross-reference that with maybe where you live or other assets or businesses you're associated with. You keep your information as private as possible, which there's a lot to be said for that. The holding company would also be a non-income producing entity, meaning you're not using the holding company, to purchase properties or hold assets. You're not making any transactions with it. Its only purpose really is, once it's in place, is to remain in the background and take ownership over other businesses or other LLCs. Right? Now, when you do get to where you're setting up additional entities, no matter what state you set them up in, right? As long as they are owned by the holding company, the subsidiaries will adopt the same three benefits. So your subsidiary would also have the maximum asset protection, tax advantages, and privatization. It's a very unique way of giving yourself the most, protection that we possibly can. I want to go through and really break down the LLC in good detail, right? And there are 7 functions that make up an LLC, or I guess 7 chapters. So number 1, right out of the gate, is legalization, meaning the LLC is what, again, separates you by filing on the documentation with the Secretary of State, is what gives that legal start to your business, so you can show yourself as just that, a legal, legitimate entity. Number 2 is probably the most popular piece of an LLC, which is the separation and protection. The LLC separates yourself along with all of your personal assets from any type of liability from the business. If somebody claims that you got them sick or injured, the last thing that we would want is them coming back and attempting to either sue or try to liquidate you personally. Right? We want to keep business and keep personal. Now, these first 2 are strictly the fundamentals. So it makes no difference on, what industry you're operating in, what state you're in. When you're setting up a business or an LLC, number 1 and number 2 will always be the same. So where LLCs differentiate from one another is number 3, which is the operating agreement. And if you're taking notes, I would definitely put a star next to this one or highlight it. This really is one of the key components. The operating agreement is an internal document, anywhere between 7 to 10 pages roughly, and it outlines everything you see here. So it talks about ownership percentages. So it explains how your profits are distributed. This gives you all the different rules, regulations, provisions. More importantly, the operating agreement gives you your legal tax status. So that is what designates and specifies the industry that you're actually conducting business in. The first 3 are really the kind of the fundamental side of it. Now we're going to get into some of the fun stuff, right? What I really enjoy talking about. Number 4 are the tax deductions. So there ends up being over 250 sanctioned deductions. So 250 individual deductions. And this list is scratching the surface. But by having LLC, now you can write off, investments for coaching and education, right? If you're part of a mentorship, portions of your own rent or mortgage, or travel expenses, cell phone bills, internet, right? All of these things become tax deductible. One thing that I will say is, whether you are a serial entrepreneur, or if this is the first time really discussing LLCs, a lot of these expenses I call anyway expenses, meaning you probably pay for these things anyway, whether you have a business or not. Sure, we all have a cell phone, right? We all pay for home internet. By getting the entity in place, you can now take deductions and write these things off against your overall income, which obviously is a significant benefit. 2 other things to touch on here. So first, for all of our clients, when we set up an LLC, we will also send you we call a business deduction guide. It'll walk you through in more detail, what you can write off, also maybe what to stay away from. And then also, all of our clients will get a one-on-one individual tax consultation, where our team will really sit down with you and talk to you about how to track expenses properly, right? We'll talk to you about all the different filing requirements you're going to have, or more importantly, how to mitigate your tax liability. Because it's great if you go out and make a bunch of money, That's fantastic. It's a good problem to have, but let's make sure you take the additional steps to ultimately keep that money in your pocket rather than just sending it to the IRS in the form of taxes. I'm sure we can all agree that the IRS doesn't need any more of our money than they're already getting. The fifth function is pass-through taxation. So an LLC is referred to as a pass-through entity. Just simply means everything passes through to you as the individual. Now, within that, you have the pass-through taxation. The easiest definition is it allows us to apply all deductions against all income. Again, I'll repeat that. It allows us to apply all deductions against all income, meaning when you sit down to file taxes, you'll still be doing one filing, but it will include both your business taxes and your personal taxes, combine it all together. And doing it this way allows us to apply those 250 different business deductions against your overall gross taxable income across the board. Whether you have, W-2 sources of income, if you receive any 1099s, even if you are married filing jointly and your spouse has income, the deductions that you get from your LLC would apply to your overall sources, which is a huge benefit. So there are two examples that you see on the screen here. Looking at the top example first, this is a single filer, somebody who is not married, and they do not have an LLC in place. For conversation's sake, we're going to say they have a $65,000 per year gross income. So when this person gets to tax season, all they can really do now is take the standard deduction of $15,000. So in turn, you'll notice, their taxable income is lowered down to $50,000, but in a 26% average tax rate, 13 grand, give or take, is still going to the IRS. That is clearly not the most ideal situation. The bottom example is the same case study, the same person. Okay? The only difference here is we've now structured them in LLC. So a few things to note is, number one, the income level is the same. This person still makes $65,000. They still get their standard deduction as being an individual, but then we get to apply all of their business deductions. And our accountants report that on average, a new business, you could expect maybe 10 to call it 30,000 a year in, business deductions. So for our example, we're using the low end. We're going to say 10,500. Well, now you'll notice the taxable income is brought all the way down to 39,500. But in turn, that also moves you into a lower tax rate now, only 19%, and only 7,500 goes to the IRS. So all in all, by this person doing nothing more than simply structuring an LLC, ends up being about $5,500 a year of tax savings, regardless of whether or not they've even made a single dollar yet. And if you compound this year 2, 3, 4, that's the low-hanging fruit. That's an easy way to have a major impact on your tax liability, and just keeping that much more money in your pocket, again, rather than sending it to the IRS. Right? So to simplify that as kind of a wink, wink, nudge, nudge, that if you have an LLC, ultimately you're almost making money just by the additional savings that you get on your personal sources of income. Huge benefit. The sixth function would be the startup provisions. So any type of one-time investment, whether it's an investment into a mentorship or an educational platform, even traveling to a seminar circuit or buying a computer, kind of a one-time cost to get your business up and running, not only does it become deductible, it actually becomes 100% tax deductible. You get to write that off as a dollar for dollar deduction. And we emphasize that because 100% deductibility is the best that we're going to get, right, with the way the tax code is written. So we really want to maximize and try to push as much into that startup provision bucket as we possibly can, because that's where you get the maximum benefit. Like, take advantage of that. Treat it as a safety net to protect, your financial outlay while you're either, getting things up and running, or just in the very early stages of your entrepreneurship journey. And then last but definitely not least, number 7 is compliance, which compliance is the business's stamp of approval. So it is a federal compliance obtained through your EIN number. And there's a few places you'll need to use it. For example, when you set up a business bank account, the bank is going to want to verify that you are a legal, legitimate business. So make sure you have all of the compliance. Or if you're working with maybe a client or a contractor or just anybody who needs to verify that you are just at a legal, legitimate business, the compliance is how they do so. So to make it easy, we obtain it for you right along with the LLC. So in a review, the LLC creates separation between your business and personal life, obviously protects all of your assets, opens the door to all the different tax savings, and ultimately legitimizes your venture. Now, I see a few questions in here, so uh-oh. People are saying there's no sound. Hopefully you guys can all hear me okay. So a couple of the questions that I'd want to address just really quickly in here. So one, Anthony asked, can you take deductions without having an LLC? It's a great question. The simple answer is yes. I mean, there are deductions that you can take. With the change in the tax code, by having an LLC, you're able to really maximize on what you can and cannot take, and ensuring that you're trying to keep as much of that in your pocket as possible. Your second year business, just the first. So someone asks, can 100% deduction be taken in your second year of business or just the first? That is a fantastic question as well. The startup provisions, unfortunately, do not last for the lifetime of your business, right? It's a pretty short window. So it really is based on within the same reasonable time frame of setting up your business. So we can go back into previous years and capture startup expenses. It's on a situational, kind of like case-by-case basis. Let's see. One of the other questions, is it more beneficial to have it linked to a traditional bank or a credit union? So I assume you're meaning the LLC. Ultimately, banking it's your choice. There's really no rhyme or reason on who you use. My suggestion, of course, would always be to use a national bank. Credit unions can be great. A lot of times, credit unions are more focused on smaller community individuals. So, but it's up to you really on who you bank with. Okay, and then April asks, what is special about those states? I have an LLC in Georgia. Again, fantastic question. So the 4 corporate haven states, simply put, have the best corporate bylaws out of any other state in our country. So some of the differences would be, for example, Wyoming being a non-disclosure state is not going to list your name as being an owner or a member on the documentation. That is not something that all 50 states offer. And again, then it comes down to the charging order protection, the fact that Wyoming leans more towards the business owner rather than somebody else who's trying to sue you for whatever business dealings there might be. And then Carlos, incorporation is much different than an LLC. There's just a lot of differences, right? Depending, I guess, on what kind of corporation you have. And then I'll address one more question. We'll obviously come back to this. We'll have plenty of time for a Q&A. Is there any requirements to having a holding company in a state like Wyoming if you're not a resident? The only requirement, you can set up an LLC in any state you want to. You have to have a physical address in that state. Now, chances are if you don't live in Wyoming, you don't have a physical address there. So we offer a registered agent service in the state of Wyoming, so we can set your entity up to a physical location in that state. So other than that, no, there's no requirement. Now, one of the things that I want to touch on, and then of course we'll come back to some of the questions, I want to just briefly touch on some of the business credit, right? One of the biggest questions we get is, okay, I want to start a business, but I don't know how I'm going to fund it. So all of us are probably familiar with our FICO credit scores, right? FICO is your personal credit profile where businesses can create a Paydex credit score. So FICO and Paydex are very similar in nature. They do have some inherent differences. For example, the first place they differentiate is in the fact that your business, under absolutely no circumstances, would ever automatically or inherently be given a Paydex score. You have to go through certain steps in order to establish it. But when we say that, it is not rocket science by any stretch. It really is just following a specific process. And then also where they differ is simply just the way that they're built. So again, as long as you have a social security number, you are automatically given a FICO score. That is really the only requirement. Is if you have a social, you have a FICO. Those two go hand in hand. Having one is what gives you the other. And then really it's completely up to you to build, maintain, and improve your personal credit. As long as you pay your bills back or pay your borrowers on time, your FICO score will increase, and then the ability to borrow more will follow. The PAYDEX is on the exact opposite end of that spectrum, meaning before the over 4,000 banks across our country would ever be willing to leverage your business capital, they're going to want you to prove your credibility prior to receiving it. You're going to prove yourself first. Okay. Now, also, if you notice on the screen here, your FICO score will range on a scale from 300 to 850. And if your FICO score is 780 or above, you're in the excellent range. And you really have no problems obtaining credit. The business PAYDEX, however, ranges on a scale of 1 to 100. And the target goal is to get your score to 75 or above. Once you accomplish a 75 or higher PAYDEX score, your business is then referred to as being a self-sufficient business, meaning your business is now on its own 2 feet financially. It is not relying on you to use your personal capital or your personal credit. The business is now operating off of corporate funding and business lines of credit. Okay? And if we really boil this down, there are 2 federally sanctioned credit profiles that are recognized for a reason. On one hand, you have personal, right? Your name, your social, and in turn, your FICO. On the other hand would be the LLC, the EIN, and in turn, the PAYDEX. The goal is to not have one create a negative, interaction for the other. We don't want your business to essentially destroy your personal credit or vice versa. If you can separate these two, that gives you the best shot at longevity because, again, you're never acting as the personal bank to your business. So our team, again, I'm going to share a link with everyone to get a one-on-one complimentary consultation. My team is going to do a one-on-one hour-long conversation with each of you in a one-on-one setting, really just to kind of dive into what your personal situation is. During that conversation, we're really going to dive into, some of the initial expenses you've taken on for the business, really to get an idea of what your, fundamental knowledge of credit is. Once we determine that, the 4 steps we walk our clients through to build your business PAYDEX are these 4 steps, very simple. So number 1, establish, meaning we have to establish your credit profile. We've got to make sure that, number 1, you have all of your business compliance completed, making sure that you have, a business checking account set up, creating a Dun & Bradstreet profile. That's what actually gets your score in place. The second step is then to build. We've got to build that new business credit score to 75 or higher. That is all done through utilization. So got to get approved for a level 1 account, like a gas card or a Granger, a Uline, something very simple, making a purchase, and of course, paying it back, right? Going through a 30, 60, or 90-day billing cycle is what increases your score to 75 or higher. The third step would then be to shift. If anyone right now listening to this has, quote unquote, business related debt that is being housed on your personal FICO or your personal finances, we want to walk you through shifting that debt off of you individually over to your business PAYDEX, right? Get yourself out of the red as quickly as possible. More importantly, get your FICO scores and ratios back to where they should be and let your business finally house its own debt, which is really where it should be. And then number 4 is receive, meaning your business is now receiving PAYDEX funding. So in the future, when you need capital, whether it's for, materials, supplies, education, whatever this expense could be, at that point, it really should never even be a thought that crosses your mind to go and dig into your own pocket. You shouldn't be pulling out a personal credit card or getting into your personal savings because now the business is funding organically, completely on its own. Again, you are no longer the personal bank at that point. Okay. I see a few more questions in here, so let me scroll back up. So Bill says, can you set up a holding company if you already have an LLC? It's a great question, Bill. This link that I'm going to share with you, and this is for everyone. You can use this link. If you click on this, it will take you to a landing page where you can actually schedule a one-on-one consultation. What we've worked out with everyone who is, seeing this webinar is we're going to give you a free consultation, right? You have nothing to lose other than gaining a lot of valuable information. Book a call so my team can actually look at, what type of events you have in place, where it's at, and we can make recommendations on either tying that to your new holding company or starting completely from scratch. So let's see. So Manny asked, when I set up my LLC, what is my corporation selection? C Corp, S Corp? Yeah, so great question. So it really depends on how you structured it. If it's a single member LLC, typically that's going to be considered a sole proprietorship from a tax standpoint, unless you set it up as an S corporation right out of the gate or set up as a C corporation. But yes, you can make changes to it throughout the year. So if you needed to adjust it, you definitely can. Michelle asks, is it better to have an S corporation? What if you're wanting to purchase your own office building, which gives you better deduction and protection? So great question. This is a very popular question we get as well. Going back, someone else asked too, the difference between a incorporation or an LLC. Really, if we boil that down and compare an LLC to an S corporation, there is not a big difference. They are pretty much the same thing. Very few minor changes, which the S corporation does save you about half of your self-employment taxes. Rather than paying 15%, you're paying roughly 7.5%. However, it is a decision that's solely based on the amount of income you're generating and the type of income. So what I tell every client that I work with is it is not a decision you should make on your own. You should always have your accountant make the decision for you. And you can change it at any time you wanted to. Your accountant can change it 2 years down the road to transition to an S corporation if it made sense, but always let your accountant be the one to decide for you. Kara, let's see, I lived in Alaska for 15 years. I don't have an address anymore, but I still have an account with local credit union. So that's a tough question, Kara. Honestly, I don't know that I could answer that. I'm not sure what Alaska's specific requirements are to claim residency. But again, regardless of what state you're in, as long as you have a registered agent address, which we offer in all 50 states, allows you to set the entity up in whatever state you choose to. I will also say, Alaska, yes, they definitely are a corporate haven state. Wyoming is significantly cheaper. Let's see, Kel, can you look into existing LLC to make it more efficient or recommend restart? Absolutely. Well, if you book a call with the link that I shared, my team will definitely go through and see what you currently have in place now, and then we can make recommendations. One thing that I will promise everyone is my team, I've got about 60 corporate advisors. They are not just going to recklessly tell you to set up LLCs. They will really take the time to figure out your situation specifically based off what your short, mid, and long-term goals are and make appropriate recommendations. The other thing I will tell you is this is never just a one and done conversation. We don't just have one call with you and then bid you farewell. When you work with us, you essentially become our client for life. We're with you every step of the way. So if you have a question that pops up 6 months, a year, 18 months down the road, you still have a point of contact within our organization that you can reach out to at any time just to ensure you're obviously going in the right direction. Fantastic question. Ruben, just to clarify, the Paydex uses your current credit utilization to determine your score. So Ruben, a great question about the utilization. Not necessarily. Really what the lending institutions look for is your fundamental understanding of how credit works, but we're setting up a completely separate credit profile that is not associated with you on a personal level. Scott, can you loan personal money to your LLC and charge interest-only payments? I wish, right? Great question. But no, if you were to put your own influx of capital into your business, not a taxable event, unfortunately, you wouldn't charge yourself, but you can obviously put your own money into your business. Completely fine to do so. Can you transition from 1099 as a realtor? Yeah, absolutely. You can transition from a 1099 to it being an LLC. It's very simple to do so. Once you set the LLC up, just have your broker, whoever you work with, just pay you to the name of your LLC, not to you personally. Oh, sorry. Yeah, my screen is still on that. You're right. I've not changed it yet. The next steps, this really just explains that once you book a consultation with us, our team, like I said, we'll spend 45 minutes to an hour, really deep dive everything. And then we walk you through what it takes to actually get the structure started. No matter where you're at in your entrepreneurship journey, if you are a brand new entrepreneur, or if you are a serial entrepreneur, there are plenty of ways we can add value to your business just to ensure, again, that you're going in the right direction. Right? You don't need to be brand new. We can work with anyone and just make sure you have everything in place to give yourself the best chance at success. So Randy, if I operate a real estate agent in Idaho, how can I operate? Yeah, so Randy, very simple. It would be, let me actually scroll way back up here. Once you have the holding company set up in Wyoming, we would then set up a subsidiary LLC underneath it. You'd actually conduct all of your business out of. So you'd have an Idaho LLC that is owned by a Wyoming holding company. What is the free? Unfortunately, Julian, the consultation is not with me. I have a team of about 60 corporate advisors that are all very, very well educated. They'll take equally as good care of you. But unfortunately, would not be with me. Bill, yes, we do. So we have a full team of accountants, CPAs. We can handle all the tax preparation for both business and personal. Take care of literally everything. Also, something else that I enjoy. I mean, it's a personal opinion, but it's great that all this is handled under one roof, right? The same firm who has designed the LLC and operating agreement is in the same firm who is, potentially doing your estate plan. Also, the same firm doing the taxes. It's all under one roof. You have one point of contact. You're not needing to bounce around from person to person just to get the structure in place. We do it all for you. Brian, the first year tax benefits, a calendar year. So unfortunately, it wouldn't be based off a calendar year, Brian. It goes off of from the start of the business. But like I said, there are ways we can go back into previous years to capture startup expenses. You're fine, Bill. No worries. We covered a lot, right? Hopefully everyone feels like you're a professional when it comes to entity creation and U.S. tax code. And then let's see, does the PAYDEX process begin with your FICO as a starting point? So no, not necessarily. Trisha doesn't begin with your PAYDEX or your FICO. They will look at it just to make sure you understand fundamentally how credit works. Susanna, can I create a holding company in Wyoming and bring 2 LLCs in Wyoming under it? Potentially, right? I would book a call with our team and let them kind of just take a look at the intricacies of the entity and just make sure that we can do it. And if not, we can make recommendations on what needs to be done, but we'll give you the best guidance we can. Yeah, David, so great question. Our team, so for example, take our tax division. We're licensed across all 50 states. So it doesn't make a difference on where you're located or where any of your clientele is, or if you move, we're licensed from coast to coast. Do you have pricing list of, so great question, right? I always get this one as well as, how much does this cost? Which I can absolutely appreciate. What I will say is we do not have a cookie cutter approach. It's not a one size fits all package. All of our services are custom fit to you and your situation. That's where I say, again, you can't beat getting a complimentary consultation for our team to really put a package together that is just for you, and then they'll tell you exactly what it would take. So if anything, book the call. Like I said, you have nothing to lose other than gaining some more information. And then our team, our goal is to give you guys as much info as we possibly can, and then support whatever decision you feel is best going forward. Ruben, that's awesome. I'm excited to hear it. We're definitely looking forward to chatting with you. Okay, so Rhonda asked, I have an LLC categorized as real estate open for investing. Do I need to do another LLC as RE sales agent, or can I do a DBA for sales agent under the current LLC? Again, this is a great question. Mark, I like that. So this is a great question, and there's a couple of ways to look at it. That in the eyes of the IRS, you could funnel multiple streams of income through one LLC. The IRS really doesn't have a lot of issues with that. However, I would strongly advise against it. Again, my own personal opinion is have different streams of income running through different entities, right? There's no sense in letting one stream of income create a liability for another. Keep them completely separate. The LLC and separating, that's the easy part, right? It's so simple just to give yourself the additional separation between the incomes rather than letting one create liability for another. It's, of course, a case-by-case basis. In some cases, there might be a few one-off transactions that you do. Great, you can funnel it through one. But if you're going to be focusing on 2 different streams, then I would definitely separate them. Charlotte, yeah. So all of our services fall into the startup provisions. They're all 100% tax deductible. Yes, Dustin, absolutely. So our team focuses on really anything real estate related. Even people who are active in say like the stock market or cryptos. Our team can focus on all of it, just to make sure that anything that you're doing, number one, is being done correctly, and that you have as much support as you need going forward, just to make sure it's done correctly. Samantha, my pleasure. I want to make sure that I didn't miss any questions in here. There is one last thing, which hopefully we've got plenty of time here. One other thing that I do want to touch on, which I'm going to skip way ahead here, would be the estate planning. So I apologize. I know we kind of went through this, but so plan, profit, and protect, right? We know that there's a couple of guarantees we have. Obviously, we got to worry about taxes. And unfortunately, none of us are going to live forever, right? Just the reality of it. So estate planning becomes wildly important if you own assets, if you have properties, or if you have a family, if you have a spouse, kids, you've got to put a plan in place that clearly outlines what you want to have happen with all of your assets, your net worth upon a death. The overall goal of estate planning is to avoid probate kind of at all costs. So by setting up a trust, first, that's what allows you to avoid probate. Right? Within the trust, you would have your will, right? Your last living will and testament, that's where you actually outline all of your afterlife wishes. Right? Along with that, you'd have a living will. The living will is a health directive. It really allows you to identify and explain what your wishes are upon either an unexpected death, or if you were to be put on like artificial life support. Okay? And then finally, there's power of attorneys. There's both a medical power of attorney and a financial power of attorney. And that's just somebody that you pick that can either make medical decisions, can talk to doctors, or come up with a care plan, or somebody who can cash your checks, pay bills, just make sure that your financial life stays intact. Traditionally, when you work with an estate plan attorney, they're a lot of times going to factor in all of the assets that you have to figure out your net worth. And they'll just simply charge you a percentage of your net worth to complete your estate plan. That can be a gift or a curse, right? If you have a higher net worth, estate planning can become quite expensive. The rule of thumb is you want to come back and reevaluate your estate plan at a minimum every 2 to 5 years. Make sure that as what your life looks like today could be very different in a year from now or 5 years from now. Make sure your estate plan kind of always stays up to date. So going back to it can be a good chunk of money to get in place, but then when you make changes to it, attorneys will charge you either a revision fee or an amendment fee. The cost kind of always continues to increase. At Prime, we do not do that. What we offer is called an unlimited estate plan, which you're getting all 4 of these components, but we give you, unlimited support and unlimited revisions. So that as you either are selling assets or purchasing assets, you can make changes to your estate plan. We just don't have any additional fees that go into it. So it's a one and done type of service based on what your situation is. And then the overall structure, right? This is kind of what we see the overall structure looking like. Obviously, a very zoomed out. Please don't let any of this overwhelm you. If you see this structure, like, oh my gosh, where do I start, right? And that's not what you need to figure out. That's what my team is here to walk you through. But eventually, and if you see at the very top, keep that in your mind that your structure is a living, breathing organism. It's going to change over time. It's going to grow. What you start off with will look different in a year later, 2 years later. But ultimately, this is kind of how we see the entire piece of this coming together, that your estate planning at the top, the trust would take beneficial ownership of your holding company. The holding company would take ownership over all of your subsidiary LLCs. If something were to happen to you upon a death, everything would just funnel upwards. There'd be a very clear plan in place that the subsidiaries would be defaulted back to the holding company. Holding company defaults to the trust. And then in your will, you can explain, hey, I want to leave this to my spouse. I want to leave this to my kids. I want my kids to sell everything and take the proceeds, right? Your wishes are obviously what then takes place. So it really allows you to keep a plan in place, even if you're not here to see it through, that your loved ones still follow the wishes that you have for the asset class, the net worth, right? The portfolio that you're building right now. I really hope this was informational. My main goal is to try to provide clarity. Hopefully I didn't just muddy the waters for anyone, but I can't stress enough that book a call, right? Let our team go through and just explain to you in detail in a one-on-one setting, right? Ask any questions that you want to. My team is more than happy to answer any questions you guys have. Let's see, any other questions? Absolutely. I'm glad you guys got some good info out of it. Obviously important stuff that I think, unfortunately, Randy, all right, for tomorrow. That's awesome. Good. Yeah, Shauna, absolutely, right. You want to have it, then I'll default it to their name. And really the another point to the estate planning side of it, why it becomes so important is you want to try to avoid death taxes, right? Unfortunately, states look at it that if you pass away, they can ultimately tax your loved ones. Whereas if you have the estate planning in place, your family's going to avoid the unnecessary death taxes, right? And you can transfer them how you see fit. It makes the process very, very clean. That's awesome. I'm glad to see it. Randy stole your time slot. Very visual. Yeah, Teresa, I apologize, but if you book the one-on-one call, my team is going to go through almost the exact same slides, very, very similar. And then in turn, they'll be able to really go at your pace, so you can ask as many questions as you want to. They'll show them all to you at as quickly as you want to be. Where does a corporation? So the corporation, I mean, it would be any one of them, right? We have LLC listed. It could be a corporation. Don't look too far into that. Our team will walk you through it. Yeah, I need to change my appointment. So if you got the confirmation to your email, there should be a button you can click on that will allow you to cancel and reschedule, or I'll remember your name and I can have someone reach out to you if needed, but you can do it through the email confirmation that you got. That's Randy, that is, you really couldn't cap this off any better. This is really the entire point, right? Is give yourself as much liability protection as possible, but ultimately protect yourself from the tax standpoint, right? Taxes are just an unfortunate thing we have to deal with. However, there's 75,000 pages of tax code. We don't expect anyone to go through and read up on it, right? It's not just light reading for the weekend. Our team's already put in all the heavy lifting there, and we're going to walk you through all the creative things that you can do to offset the tax liability. I mean, if you have kids under the age of 18, we'll talk about how to pay your kids a salary, a great way to offset your taxes. We'll talk about making investments into like HSA accounts or SEP IRAs. There's a lot of different things that you can utilize once the business is in place that allows you to again offset the taxes. Rhonda, with Guardian, or if you have the contact for corporate advisor, you can reach out to them and they can get you in connection with whoever you need to. And you have the direct access to them for the duration of your business. That I can't speak enough to, right? I mean, I still have clients from 6-7 years ago I'm in direct communication with, right? Our team is there with you every single step of the way. Even if you have questions about something you don't know that we handle, still reach out to us, right? We have resources for everything. Use us as just really your main point of contact. So unfortunately, I can't show the slide deck, right? I wish I could. When you go through the consultation with the individual consultation, like I said, they can expand on any of the questions you do have, but unfortunately, I can't send the slide deck out. Hopefully, I didn't miss any questions, right? If I did, I apologize, right? I will say, every time I hop on with your guys' group, it is very active, which I can appreciate. I think it's great. You guys have a lot of really good questions. And that's where, again, I can't say enough how important it is to get the one-on-one conversation booked, because then they can go at your pace and they can address everything in a one-on-one setting. One last time, I will share the link. Yeah, Mark, so great question. When transitioning from an LLC to an S corporation, it's all based on income, right? You could ask probably 10 different accountants and get 15 different answers. A good rule of thumb would be $50,000 a year or more in active income. You can justify having the S corporation, but even in that sense, I would always leave it up to your accountant. The last thing you want to do is make a decision on your own that ultimately, you think you're taking 2 or 3 steps forward, but really it's 4 or 5 steps backwards. Lean on your accountant 100% of the time. Let them make the decision for you. This is standing off available through VXP Solutions. Oh, yes, absolutely. Book a call, and then our team will take over. Good. So again, I appreciate it, right? I'll give you guys some of your afternoon back. I appreciate you guys spending, 45 minutes with me. Absolutely, Shawnee, your LLC can have DBAs. So just a nickname for your business, completely fine. So again, if I didn't get to your question, I apologize, right? All these questions are extremely good. Booking the consultation, our team will take over from there. They can answer any questions you do have. We look forward to it, so please book a call. I appreciate you guys chatting with me. So enjoy the rest of your day, and we look forward to seeing you on one of our consultations. Thank you.